The best types of dividend portfolios are those that give you income on a regular basis, income while you sleep, and income that keeps compounding and growing on its own. This is the biggest thing that excites me about dividend investing. Hey guys, what's up? How's it going? In today's video, I'm going to be giving you guys an update on my Canadian-based dividend growth portfolio, and if you guys follow alongside with me with this weekly investing case studies, you guys will be able to build your own massive dividend portfolio as well. And in today's video, I'm going to be adding a brand new stock inside our portfolio. So if you guys stay into the end of the video, I'll show you guys what stock I'm going to be buying. And actually, I'm going to be buying a couple different stocks as well. So stay tuned and stay to the end of the video if you guys want to see what stocks I'm adding inside my portfolio. If you're brand new to the channel and this is your first time watching this video series and joining me on this case study, the main things we like to focus on are dividend growth stocks, good quality Canadian stocks that are dividend growth based. We like to focus on reinvesting those dividends, so we're taking those dividends and reinvesting them over time. And the last thing I'm going to focus on is dividend increases. This is stocks that are growing their dividends on a regular basis. So just really quickly, I'll give you guys a quick little update on our dividend growth based portfolio. So here's our Wealth Simple trade account, and the portfolio that we're using to grow our dividend growth portfolio is going to be our RRSP. So this is a brand new account. We have $449 inside of it. Pay no attention to the overall return because Wealth Simple Trade has a bug where if you put money in, it acts as if that money was part of your return. So we're not really up 29% inside your portfolio. That'd be a little bit crazy, but all time we can see that the portfolio has been kind of basically not too much is happening. You know, we just started this portfolio a month ago, so there's not too much to update, but here's what the portfolio is looking like so far. So before we go any further in the video, I just want to say really quickly, guys, if you guys want to support the channel, you guys can subscribe to the channel. I want to know if you guys are enjoying this content. If you guys like these videos, you guys find them helpful, let me know by subscribing to the channel. If you guys are subscribing and I see you guys enjoying the content, I'll keep doing videos like this. And I also want to do another shout out that there is a link in the description of this video to sign up to my own video course that will show you guys how I built a 6-figure portfolio from scratch. So if you guys want a little bit of extra work with me, you guys want me to hold your hand and give you more in-depth tutorials, be sure to check that out. Once again, link in the description of the video. And to show you guys what holdings we currently have, here's a quick little overview of the 3 stocks that we hold. So we only have 3 stocks inside our portfolio. I'm going to be adding a new one later on in today's video. So the first stock we have is Alimentation Couche-Tard. This is a growth / dividend stock. This is a really big growth play. We're looking to add a company that's been going very well and get some nice little dividend increases, actually some pretty big dividend increases. And CNR stock is going to be our railway stock. This is more of a established dividend stock, but also really focused on growth. You know, the railways are some of the most fundamental stocks of the economy. You know, we need to ship things, and that's always going to be in big demand. And our third stock that we bought was a financial stock. We finally bought a bank, and this was in the last video we did, and we bought TD Bank. So TD is my favorite bank stock. I think it has the most growth, but it also has a nice solid dividend yield currently. So it's kind of like more of a dividend stock, but it also has a lot of growth too. So we're kind of trying to do a combination of different dividend stocks inside this portfolio. Now, because we're looking to build a massive portfolio that's going to actually grow over time, we want to focus on stocks that not only have dividend yields, but we also want to focus on stocks that have a lot of growth. And a lot of these stocks that I actually invest into throughout this case study, a lot of people wouldn't really consider to be your traditional dividend stocks. They're more stocks that are primed to have more growth, but also going to be used those dividends over time to help compound that growth. So the stock I'm going to be buying in today's video is going to be a perfect example of this. And to be honest, guys, this is probably a stock I've actually should have bought a long time ago. I've been eyeballing it, and it's been recommended to me by a lot of people, viewers of this channel, and I think it's an awesome stock. So the stock we're going to be adding to our portfolio today is going to be Dollarama. And I probably don't need to give you guys an introductory to the company. You know, they have all kinds of cool things. You guys have probably seen the Dollarama dollar stores all over the place. And the funny thing about them is they used to be a dollar store, but they're actually so much more than just a basic dollar store nowadays. And I'm going to give you a little bit of a story time right now. In fact, I remember when I was young, I would just get my own place. This is like maybe 10, 11, 12 years ago now. It's crazy to think about that. I went to a dollar store with my buddy, and we had our own place. We had this empty house. We didn't have a lot of money because we were just getting started kind of thing, but we were super pumped because we had our own place. And I remember going there, we bought so much stuff because they had so much cheap stuff like kitchen stuff for the house you could buy, stuff you need to survive on. So that was a cool experience for us, and I remember that to this day, even though it was so long ago. But ever since that day, you know, Dollarama just keeps expanding. It's so much more than a dollar store now. There's all kinds of cool things, and you know, it's got that $5, that $6, that $7, and they just keep kind of growing it over time. So they definitely have their market, and with things being so expensive now, like houses, cars, groceries, I think people are starting to look for those cheaper options. So it's just a quick little update with some basic information about Dollarama stock here. So the ticker is DOL on the TSX. It currently trades for $85.17 Canadian, and the stock currently has a dividend yield of about 0.33%. Year to date, Dollarama is up 6.65% in terms of stock growth, and the 5-year return for Dollarama, just including stock growth, is 82%. 82.42%. In regards to earnings, Dollarama stock has done pretty good for 2023. In January 2023, the company had nice good green across the board, and for April, we also saw some nice good earnings reports as well. And take a quick little peek here, we can see the EPS has been steadily beaten by a few percentage points on a regular basis over the past year or so. So the company just keeps growing, and those financials are looking pretty good. So we just seen that Dollarama has some pretty massive growth, which is why I'm a big fan of the company. Now, the company has also had some pretty solid dividend growth as well, and the dividend yield is currently at 0.33%. So some people wouldn't even consider this to be a dividend stock, and I get that, it's more of a growth stock. But one of the big things I like it from a dividend growth perspective is that it has that low dividend yield, and it has a super low payout ratio of 9.77%. So we can expect this company to have tons of room to grow that dividend, and that's really the secret of dividend growth. It's companies having those dividends and growing them aggressively over time, as well as that stock growth compounding. Let's take a peek at the increases from the dividends of Dollarama over the past couple of years. So 2016, we've seen pretty double-digit increases for 2016, 2017, 2019, and 2022. And then 2023, we've seen a whopping 30% increase because the company's just been doing so well. So when you have a company that has a low yield, it's got a low payout ratio, and is doing well in terms of earnings and growing, that's where you get those massive dividend increases. And the cool thing I like about Dollarama is the fact that they're always constantly growing and expanding. It seems like these stores keep popping up everywhere. According to the company management, it looks like they aim to reach 2,000 new stores by 2031, and I think they just recently opened their 1,500th store here actually at the beginning of this year. So they have a long ways to go, but the company is constantly growing and expanding, which is always a good thing. And because I like to be 100% transparent on this channel, I'll show you guys basically what I did today, which is buy Dollarama stock. So I did record this earlier, but for some reason my OBS screen recorder did not record the buy. So I did go inside the RSP as I showed you guys earlier, and I put $100 in, and I spent $80 on Dollarama. Here we have one share of Dollarama, about $85. So we bought one share of Dollarama through Wealth Simple Trade, and the $14 we have left over, we're going to use this to rebalance our portfolio into some of the other shares that we want to bring up and kind of once again have a little bit more balance inside our portfolio. Now, one important aspect of building a dividend growth portfolio is finding balance over time and regularly rebalance your portfolio, because as you buy more shares, things will kind of get a little bit out of balance. So I like to use a tool called Passive to basically show me how many shares of each stock I have. So here's the 4 stocks we have here: Alimentation Couche-Tard, CNR, Dollarama, and TD Bank. And here's the line here showing us that I want 5% of each holding. Now, because we have, we're looking to build 20 stocks inside our portfolio, this is we have a big holding in cash, which is about 80%. So things aren't quite 100% there yet. So we're always going to be a little bit out of whack. But my main goal is to kind of just make all these little green bars be about roughly the same. We can see the actual balance here. So Alimentation Couche-Tard, we have 32%. Allocation side of portfolio. CNR is 24, Dollarama is 20%, and TD is 20%. So if you want to bring these more balanced, we take our smallest holdings and add a little bit extra in there. So since I already bought Dollarama stock today, we'll take the rest $14 that we have, and I'm going to do a fractional share and buy some TD Bank stock. If we head on over back to the portfolio, we're going to go through here and click on TD Bank. I'm going to go through here, make sure we have the RRSP selected. We'll go fractional buy, and we're going to punch in 14.67, and that's going to be the fractional share that we're buying, and that's going to go through at the end of the day. Now, portfolio is pretty small right now at the time of doing this video, and we haven't seen a lot of growth, but as you guys know, as I've built other portfolios on this channel, it takes time. You got to put in the work, you got to be patient, but really once we get those dividends compounding and growing, we're going to see things grow, and it's just going to be compound, and once it's going to start off small, but it's going to keep getting bigger and bigger over time. Now, what I'm going to talk about really quickly is I'm going to talk about some mistakes that I see people make, especially when they're getting started, right? When I first started, I made these mistakes myself, so what I'm going to be doing here is giving you guys a couple of tips so that as you guys build out your portfolio, you can actually grow faster than I did, because you don't have to make the same mistakes that I made. So here's the biggest mistakes I see dividend growth investors making, and the first one is going to be focusing too much on yield. A lot of beginners will focus too much on buying companies with high yields, and although yields is a good place to start, it's not always a better thing. A company that has a higher yield than another company does not make that company better as a dividend stock. It just really depends. So you're going to have to look in further, but always be careful of companies that have too high of yields. It can always be a red flag. So again, you have to look further, but don't assume that just because a company has a higher yield, it's a better company. The second thing is a payout ratio and debt. A company that has too high of a payout ratio, it has too much debt, is going to struggle to grow over time. It's going to struggle to increase their earnings, and this can, basically make the company have a hard time growing their dividend. They can maybe even cut their dividend. So we want to avoid companies that have too much debt or too high of a payout ratio. And the last point is something I think a lot of dividend investors don't focus on, is growth. growth. We want companies that have steadily growth in terms of, expansion and growing their earnings, growing that stock appreciation, as well as growing the dividend. It's another big thing that people don't think about. So those are the three things I think the three biggest mistakes that I think beginner dividend investors make. So once again, depending on your approach, you guys don't have to follow these exact rules that I lay here. I'm just showing you guys if you guys do want to build a big dividend growth portfolio and you want to see it really grow over time and compound, I would recommend you start off with those essential tips. And of course, you can adjust things, you can tweak things that more aligns with whatever your investing style is. So that's perfectly normal. And I just want to mention really quickly here before we close out the video that there is a playlist for this entire series. So if you guys are brand new to the channel or you guys want to get caught up, there are previous videos that you can watch. I do upload these videos on a weekly basis, so be sure once again to subscribe if you want to be notified of when I do these videos. That's it for today's video. Let me know what you guys think in the comments. Take care, and I'll see you guys later.